I researched and looked at some of the greatest investors to ever exist, and what I concluded from that research is that individual stock picking is for losers. Okay, that might be a little bit too harsh. Let me go ahead and rephrase that. Individual stock picking without a general plan or understanding of your own financial situation is a losing game, and in today's video, I am going to explain to you why that is. Now, according to Bloomberg, retail traders lost a combined $350 billion in 2022, with the average retail portfolio being down 30% that year. This is very important to take note of, considering the fact that the S&P 500 was only down 19% for the entire year, which means that many retail investors would have had a much better performance had they just invested all or most of their money into the S&P 500. Now, why is individual stock picking a losing game? Well, first off, unfortunately, most retail investors tend to form cults around extremely overvalued stocks such as Tesla, Palantir, and SoFi. Second, there's this thing called overconfidence bias, and it's one of the main reasons why retail investors fail in the stock market. Overconfidence bias is a tendency to hold a false and misleading assessment of one's own skills, intellect, and talent. In short, it's an egotistical belief that we're better than we actually are. As a matter of fact, this YouTuber right here is actually the perfect example of overconfidence bias.
If the SPX gets to 4,000, I'm going to sell my Tesla. I'm going to sell my truck. I'm going to sell my monitors. I'm going to sell my camera. And I'm going to put it all on motherfucking puts. So hopefully that answers your question.
Now, don't think that you're crazy or anything like that. Most people actually tend to overestimate their skills, whether it's changing a tire or measuring or managing their own finances. Many people believe that when it comes to certain skills, they're better than they actually are. This tends to happen quite often. Now, how do you as an investor avoid overconfidence bias? Well, it's actually pretty simple. First thing to understand is that the stock market is very similar to an unfair game. And by choosing to play in this unfair game, it's important to understand that you are going up against computers, institutional investors, hedge funds, and very smart people all around the world who have much better skill, better data, better research, and more experience than you do. This means that the odds are overwhelmingly in their favor, and yes, they do have an edge over you. So does this mean that you can't pick individual stocks at all? No, it doesn't. But if you're going to go the route of actually trying to beat the market and have a successful career picking individual stocks, then you're going to have to spend an insane amount of time and hours and effort researching companies and reading reports. Now, to further explain this, let's go ahead and take a look at one of my favorite investors. His name is Fabio with Capital Mindset. Last year, Fabio, in 2022, which was a horrible year for the stock market, Fabio had an annual return of 21%, while the S&P 500 was down 17%. Fabio is obviously a very good investor. However, that skill that he has in stock picking is extremely rare, and the average person doesn't even have the time to dedicate the amount of hours that Fabio does to reading and researching individual stocks. Now, in a recent video, one of Fabio's viewers asked him how much time per day does he spend researching individual stocks as well as macroeconomics, and this was Fabio's response.
There was a time where I spent perhaps the good part of 8 hours per day, the good part of it. And I'd say in current time, I would spend probably on a daily basis, including weekends, about 4 to 5 hours per day now. So it's a little bit more tamed, and I know it's going to sound crazy, but a lot of people can probably relate to this. To me, it's even fun. So I don't consider it working or anything. It's actually like what I would do in my pastime otherwise.
So now we know a rough estimate of how much time it takes per day to be really successful in picking individual stocks. It can take 4 to 5 hours of reading, and in some cases it can even take 8 hours, according to Fabio Capital Mindset. So ultimately what I would say is that if you don't have the time or patience to dedicate several hours to this, then one, that's okay, because most people don't have that time, including myself, and two, you're much better off just putting your money into a low-cost S&P 500 index, which on average will give you about a 10% annual return, which is tremendously better than how retail investors fared in 2022, where the average retail investor lost anywhere between 30 to 40% of all of their money. But Echoes, what if I don't care about the stats and still want to become rich fast, so 100x my money by picking individual stocks? Well, you're definitely not going to 100x your money, and anybody who tells you that is selling you a dream, because trust me when I say that will never, ever in life happen, ever. However, what I will tell you is that if you're going to go ahead and pick individual stocks anyway, way, then here's what I recommend. First, determine your financial situation. Do you have credit card debt? Are you living paycheck to paycheck? And what are your goals? Now, for those who are carrying high interest credit card debt, it honestly makes a lot more sense to just focus your financial efforts on simply wiping out the debt as quickly as possible rather than trying to invest your money in the next 10x speculative hype stock. It's very important to remember that the stock market historically gives an annualized return of 10%, while credit cards, on the other hand, typically have interest rates around 20%. So mathematically, when you really think about it, it makes a whole lot more sense to just go ahead and tackle that credit card debt and get that out of the way first before you even consider individual stocks. The next thing I recommend is to really understand what your goals are. A lot of people want to get rich and have this false notion that the stock market will do it when it actually won't. It'll make you wealthy over a long period of time if you stay consistent, but it will not make you rich overnight. The only person who can make you rich overnight is you yourself, and you can only do that by increasing your income. And this is done by developing a sought after skill and using that skill to bring in more income. That will make you rich and give you the ability to make more money to invest so that you could go ahead and put that money in the stocks and use that to build long-term wealth. So ultimately, there's a lot of moving parts and things to consider before you make the decision to actually pick individual stocks. And it's very important to understand that in doing so, you have a much higher probability of picking an underperforming high-risk asset than you do of beating the market, as I just fully explained in this video. So overall, the best thing you can do is determine your goals, increase your income, and understand that paying off debt should be your highest priority if you have debt that has an interest rate of over 6%. Anyway, guys, that'll go ahead and conclude today's video. I really hope this video helped you or gave you a sense of direction in your financial journey. I definitely wish you guys the best, and thank you guys so much for watching, and I will see you in the next one.